Hey, what's up, YouTube? This is Martin Day Trades. Thank you for looking at this video. If you can, like, comment, and subscribe. I'm going to teach you guys what an order block is and how to use it in TradingView and to use it with your rules when looking at the chart here to use to build a high confluence setup. So an order block would be one tool to use when creating a high confluence optimal trade entry. So I just finished typing what an order block is, and I just want to scroll down and bring it up just so you guys can see that it's the an order block is the last candle of the impulse. So I want to show you guys this one I just drew out. So there's this impulse that happened all the way up here. It's the last candle on the impulse. So what we could do is use our little rectangle feature. I'm on the 3-month chart. It's a higher time frame. But you can see on the higher time frames where these areas that are going to reject could possibly be. So right here in this area, there's a high area for me to look to go short, or if I'm bullish long term, which I am, as you can see, I'm going to wait for a price to come down before I go back up. How far can price go down? There's certain levels here, guys. There's a lot of room in this range right here. So we have some areas. So it's the last up candle for the down move. So this down move up, okay, so there's a consolidation area. So I just put it right here. But if you look here, look carefully, guys. There's this expansion upwards. Let's call this the impulse, right? And then it comes down. Technically, what we could have done here to get in for buys after missing this move is use the Fibonacci tool. I'm going over order block, so I'm not going to go over the Fibonacci. But this down move created an order block, okay? So as price came up, there's this order block now, and as price kept coming back into this range, it kept having popping up. Finally had the move right here, came up, came down, opened, and then it never came back. So when it came up, came down, came up and then came down and then stopped right here, it created an order block right here too, this down candle. So price can technically, theoretically, still be bearish. Now it's hitting close to this 38% Fibonacci retracement here that I have drawn up. Let me erase this one, because this move right here. I have the Fibonacci on a 3-month chart drawn up from this impulse to this high. And as you can see, price is now retracing off this expansion since 2008. You know, we're in 2022, so that's amazing. Almost 14 years later, there's been a big retracement in the market. Where will it bottom out to? Who knows? I'm thinking deep discount. I want to be bullish down here. As soon as price gets into this level, I'm going to tell my family to go mostly all in. If it does, if it gets down here, guys, we're going to need to add at the 62, 70, and 79%. 4,000, 4,000, 4,000. If we could put $12,000 into the market at these lows and catch the expansion upwards to make, come out and then do its thing and then come up higher, that's long term is going to be the move. We can come down into this order block, maybe potentially go up. Who knows? It could come lower for the move, or down to the 79%. And I'm actually just going to kind of keep it around this level right here. So there's a couple areas, guys, where you can look for areas to buy down here, but these are order blocks. So now what I want to do is show you guys that they're on every time frame. So I'm actually just going to erase all this, and I'll just start up Monday doing all my stuff. So we're going to go down to the month now, and you get a little bit more order blocks on the month right here, guys. There's an order block right here that price was just into. The last down candle before the move up. down candle before the move up. So right here, there was a order block. Price came down through it, created a breaker block. A breaker. Now, okay, guys, now I'm going to go over what a breaker block is. A breaker block is the old order block and is now used as resistance. Okay? Okay. So we saw here how price came down and then it started rejecting this level right here, almost the 50% of that. So as soon as it would get into these areas, short, short, short. Okay, so price decided to come down. But we also have this new order block right here, and it's starting to reject it. Now, where can it go? We could target these some fair value gaps up here, somewhere along this area, for potentially another move lower to this order block. This order block is just going to be the culmination, or this last one right here. So what I'll do is kind of go right here, drop it, and you guys will see that this lines up with this last down candle before this expansion upwards. So there's different highs and lows and targets now. So from here, I can expect price to have a higher, and there's a lot of order blocks right here. So technically, guys, like this area right here is going to be an area of interest to get in for some long-term buys. Price may keep coming down, doing its thing. You know, doing its thing eventually, but this is a very good area of interest. The last down candle, so up candle, so this area right here is now the order block around there, so we can see where price has a higher likelihood of going to and potentially taking this liquidity, these swing lows right here, guys. You see those little wicks? There's a lot of stop losses right above them or right at entry now. So we're going to bullish momentum over the time for those shorts are going to try to take that liquidity, which may push up to a big figure level, which is what's right above here, 17,000. Okay, that's a good level, 17,000. Take all these stops right here. But for a move lower than back up, because there's waves in between all these bigger monthly time frames. So we can look at a weekly now time frame, and if we're doing some day trading, we can see that there's this order block that was just created, the last up candle before the move down, right here. So that's an order block right there. So price is going to have a high likelihood of going into that range, which see how London reacts tomorrow. But from here to even the 50% of that is 1,000 points. So I'm going to be seeing how price reacts, see if the bearish momentum is done. If not, I'm going to look to start trading with the trend again. I'm going to see where the trend is Monday, and then possibly Tuesday take a trade where those trending days are. So then we could go down to the daily, and even on the daily, we can see that there's order blocks. Even get pinpoint areas. So like right here, there's an order block. So intraday, we can see how it trades out and then catch a move even to this level, which is, like I said, 1,000 points. But usually the days don't move that much. The days kind of just show where the overall momentum is going, but we have to then go down to like the hour and then look for entries and targets. So these are whole days, whole movements, and what we can do is then, look for a retracement for an expansion upwards. And on a 4-hour time frame, I can see that there's a 4-hour order block right here. So we can see how price can react in this area. When the market opens, we can see if there's a move downwards for then a move upwards into this fair value gap area right here. Where can it go? Well, we can have a high probability area last down candle before the move up. So then we can draw this right here and then wait for the entry back into this area, order block, and then target this, which could potentially be 100-point stop. This is a 4-hour chart. Let's go down to 30, see if we get some better entries. Where's the big figure levels? There's a 200 right here. No, 200 seems like it's going to be a solid. And then we have this, all this area right here. See how far price can pull back. Because remember, this, we can use a Fibonacci tool here, guys. I'll show you what it looks like. It's this tool right here. Measure this impulse. And we can set some targets. And I'll show you where I put the Fibonacci. It's from this impulse. It's the whole move. And you can see that it has targets into these areas. This here is a 1 to almost 4 risk to reward, guys. We can take it a little higher, take the highs right here. Equal highs, that's almost about the 800 level right here. You could target that, take the liquidity up there. And this is a 1 to 6 now. Now, if I may want to have a 100-point stop, have it right under these lows right here, the previous day lows, and risk half a lot, so 100 pips. I'm going to do one lot for this move, and if it goes up to 6%, you know, I'm scaling out, probably take it out at 4%. The move secure some percentages on Monday, and then walk away less negative. So this is where these breaker blocks are, guys. You can check them out. Here, go to 15-minute, and you can kind of see where they lie. There was this one right here, and then we have these ones. I'm going to go back down to the hour. It is the last down candle before the move up. So I could even refine this one a little bit more too, guys. Okay, and then what I could do is see how far London trades in the morning and do it from here to here. Fibonacci. Let's say London goes up to this high right here for the move down, and you can see that it's starting to create a area of interest. Let's go down to 15-minute. 30-minute. Last down candle. I don't see anything clear. But I see that there's this Fibonacci. If price comes up here, takes the highs during London, and then comes back down, I'm going to be looking to buy under the 12 a.m. open. Plus, down here, it's tapped it a couple times, took the liquidity, but never made a lower low right here. See how it didn't make a lower low? So, okay, well, let's see if there's a pullback and goes higher. And that's where we can have our risk. But these are order blocks. Just wanted to show you guys that they're on every time frame. When you're intraday trading, you can use them. You know, let's see if we can find one. Right here, guys. Last down candle up, last up candle before the down move. So there's this one. And as price got into that area right here, retraced, and I want to say it probably retraced to the 79%, guys. Like, this is premium zones right here, guys. So as price was getting into here, and this is right at not even 930. 930 is like right here. So price may want to have to come back up into these areas, but because it didn't, you know, like it already took off, we could say, well, it took off. Let's see how high it can go up. And it went to the 50%. And then this was the actual about an hour after the open. The move dropped. The entries up here, 300 points, 350 points, essentially 400 points almost. So, yeah, guys, you see that where these things will gravitate towards to push down. And they go into these order blocks. And they're on all time frames. So, guys, please like, comment, subscribe. I trade with Andre, FBA Capital on YouTube. On Instagram, it's FBA Capital, and his personal account is I am Andre Diaz. He's my mentor. He's taken my trading and really been meticulous with it. So I went from a consistently losing trader to essentially a break-even trader, and now I'm at the point in my journey, well, where I'm trying to go from break-even to cutting out my really bad like trades, like where the setup's really not there and I take a trade regardless. Trying to cut out those days so I could preserve capital. Now let me talk a little bit about capital preservation. Capital preservation is where winners win. So winners win on their losing days. Winners win on their winning days, but the way winners keep their profits by only taking high probability setups. So I kind of just want you guys to probability. I didn't spell that right. There we go. And let me just move this way. Yeah, guys. So the way winners stay winning long term, consistently profitable, is not blowing accounts on losing days. It's easy to win. It's not easy to lose. So with that being said, guys, use order blocks with your tools in TradingView as one of your tools to build a high confluence area where you can have a good optimal trade entry. Some people call it OTE. Some people call it the kill zone. Some people call it the attack area, attack zone. Know your rules, stick to them, be impeccable with your discipline. And guys, like, comment, subscribe. Let me know how long you guys been trading and where you at in the journey. What are you improving on in the current moment? Or just let me know. If you guys want to follow on Instagram, I'm on Instagram a lot, so just hit me up, guys, and we could tap in and let's do some work. Once again, this is Martin Day Trades. Like, comment, subscribe, and talk to you guys later. Throw some gems a little later too. Other tools on TradingView.